What's good, money?
Man, so I'm doing all right, man. So back on this season one, episode 5.
Sir, time to start talking about different ways of passive income for the passive investor, man.
Oh yeah, there are different ways, whether you're talking about stocks and cryptos. So that's what we're gonna start off with on my end with the cryptos, and then how you can earn passive income off of them. Because a lot of people don't know that there's a such thing as staking in crypto. Like you can earn literally interest or dividends, like concerning crypto. And I did mention this like in the past few episodes, but now I'm gonna do a deep dive with the staking thing and then these different types of cryptos also. And the reason why I'm bringing different types of cryptos into it, because there's different ways of staking, but at the end of the day, you still earning that interest, that passive income. So I'm gonna start off with something that's real easy, which is Algorand. And what Algorand is something called peer proof of stake. So what a peer proof of stake is, like, there's a coin called Algorand, and then whatever you store Algorand, like whether in a hardware wallet or a software wallet that accepts it, you automatically earn more Algorand coins, because that's your interest right there. So you're automatically staking just by holding the coin in a supported wallet. So that's what a pure proof of stake is. And then not only that, I mean, the different wallets do different things with it too. So you might earn like 3% on this wallet or 6%, and then earn 6% in another wallet, because like depending on which wallet you set it in, you earn that a certain APY, because not all the wallets the same, but you still earn it. It's still the easiest way of staking, because all you have to do is just sit it there and you earn more interest. So that's a pure proof of stake right there. Now, yeah, Algorand is a good coin too, but this ain't financial advice though. But you can do your research on that. And then there's another way of staking called delegated proof of stake. So this is what more coins. So I'm gonna use Tron as an example. So Tron, is one of my favorite coins too. Tron is similar to Ethereum because they have their own decentralized exchange. They have like a lot of coins made on top of the blockchain. They have their own wallet, Tron-based wallet. But the difference between that and Ethereum, you can't stake Ethereum yet. Ethereum is going to go into staking so people can earn passive income. But right now, people can still just mine Ethereum. Right? But with Tron, it's a delegated proof of stake. So what a delegated proof of stake is, you use your coins as votes. And so when you stake your coins, you freeze the asset in Tron, and then you use your coins as votes. So you go through a list of what's called super representatives. And what it is just a bunch of validators. So when you send your coins to them as votes, when you send your votes to them, because it shows the total amount of votes too, and then they rank them. And then it shows you how much interest you get off each of them, because not all of them is going to do the same interest too. So when you use your coins as votes, and you could do it separately too. Like if you got like 20,000 Tron, you use 10,000 for this super representative pool, and you use the second half for another pool too. Because yeah, you send it to the validators. So you can do that, or you can just do one. It doesn't matter. It's not financial advice. You do what you want to do. But either way, you're going to earn the interest because you use those as votes, and you choose both of them. You have your coins sitting in the account, frozen, but as time passes, you'll get more Tron coins as your interest. So you can wait a month, wait 2 months, wait 3 months. It'll be sitting there for you to claim. So then when you claim them, it's not going to go along with your frozen unless you unfreeze it. But right now, it's just going to go into the total, but it shows you how much you got frozen. You still got the same amount frozen. So, but you're earning more coins though, and it's your choice wherever you want to claim them. So that's a delegated proof of stake right there. Like you're literally, choosing delegates, vote for these super representatives. So that's a different way of staking right there. That's more a harder way than a pure proof of stake, just because you got to do more. But at least you can still stake it. and earn that passive income. Now, another type of staking is a proof of weight, and that's what Hex only so far. So Hex is a ERC20 token, which means it's made from Ethereum. So like if you have Hex and if you want to move it, you still need Ethereum in your wallet so far, though, because Pulse Chain is going to come out. But right now we're just talking about the condition of the coin now, which is still only ERC20 for the time being. So it's on the Ethereum chain, and then you can swap for Ethereum with it, whatever. So what Hex is, it's a proof of weight and it's a digital certificate of deposit. So before I go into that, I'm gonna compare it to a regular certificate of deposit. See, regular certificate of deposits or CDs are time deposits where you lock your money up for a certain amount of time and then you earn more interest than in a savings account. You earn a lot more interest. But but in comparison to Hex is little because you don't need a bank with Hex. You just need the coins and a wallet that supports the staking of it, like MetaMask. And depending on how much you got in there and how much you stake for, because you can stake from like 1 day to like 5,555. So depending on how much you have and how long you stake it for, you can earn up to 38% APY. And that's a lot too. So that's Hex right there. That's what you call a proof of weight. But the thing with Hex is, like when you lock it up, you got to stick to that time that you locked it up for. So if you locked it up for 6 months to a year, just keep it the whole 6 months to a year. Because if you take it out too early, you know, I mean, taking it out early period means you emergency end stake. That's what it's called, emergency end staking. So if you take it out too early, you lose your shares. If you take it out like with like late enough, like in half the time frame or later, you can still keep your coins, the money that you put in, but you lose your interest, all that interest that was waiting on you from when you unstake. So it's best to, this ain't financial advice, but it's best to stick to the time that you set it for because it is your responsibility. But like I said before, it pays a whole lot of interest. And the coin's good itself too. The coin appreciates well because there's more people buying it and holding it than there is selling it. And they have a lot of sellers too. Hex made a lot of millionaires. But it's but because of how it's made, that's why the price is going up because more people are holding it. And it makes sense because there's people out there staking it for 15 years. That's a long time. And so they holding a lot of it for 15 years. So, and then Hex, it's been out for 2 years still, and its all-time high is 50 cents. So that so you can do your research on that. So it's a good one. So it's a good way to earn passive income. So I already went over peer proof of stake, delegated proof of stake, and the proof of weight, which is Hex. And now I'm gonna go over a different way that you're not staking, but you still earn that passive income by recycling, which is Green Zone. So Green Zone is the company, and then they have the coin called GZX. So I'm gonna go over what Green Zone is. It was founded by Tony B, a veteran, and the company pays you in this crypto called GZX for recycling. So they'll sell you the recycling bins, and then you can just throw away like your recyclables, whether it's glass, aluminum, anything you can recycle in those bins. And then what they do is they'll pay you in this cryptocurrency called GZX. And then you don't even have to pay a fee either. So if you recycle a regular way, you have to pay a fee. But you don't have to pay a fee with them, and then you just earn cryptos just by giving away your recyclables. But it's going to go up because one, you can buy the coin off some exchanges, and two, the money that they make from your recyclables, they put it back into the coin. So it's going to go up both ways, and then they plan on going global. So they're going to open up a green zone in each state, and then they're going to expand globally, and everybody like literally can participate in this, earn crypto off recycling. So that's something that's going to like you can earn side money just by doing that. Because you've been throwing away your trash for free, might as well get paid for it. So so that's my end on like how you can earn passive income off these different cryptos. Now you can see that all cryptos ain't the same. You know, all cryptos ain't gonna be like Bitcoin, or all cryptos ain't gonna just be peer to peer. There's different ways, like they're designed differently. So that's my end on cryptos right there. And then Belly can go in on stocks and then different ways to earn passive income.
Very insightful, man.
Oh yeah.
But with stocks, there's plenty of different ways to invest in stock to earn a passive income. Because some of the reasons you don't necessarily have to invest in a stock, which I mean, like Apple, Twitter, Facebook, things like that. There's other investment types within the market. Like you have things like you have bonds and rates. All those can generate income, or what I like to call dividends. Now I'm gonna go explaining exactly what is a rate and what is a bond. A rate stands for Real Estate Investment Trust. That's what rates stand for. So a good reason why you would want to invest in a rate is this goes out to my real estate owners that have properties they have to manage. Like, look, if you're the type of person that doesn't like managing properties, maybe you think for right now you have some property and it's too much for you to handle, or you're just kind of tired of the hassle dealing with tenants, the maintenance fees, and other things like that. You can own rates. Rates is basically like owning a real estate, except you don't have to manage it. That's the beauty of rates. All a rate is just a company that owns, operates, or finance some type of income generating real estate. So say this company XYZ that finances real estate, it'll be considered as a rate. You can invest in them. And normally rates, for the most part, outperform most stocks as far as dividend payouts. They're very lucrative in dividend payouts. They pay very well, some quarterly and some yearly. Like a good example, it's funny, I can't remember the name off the top of my head, but I own several of them. But it's one particular stock, I just own one of them. I remember purchasing it like, let's say like around $15, maybe $13. And it seems minuscule, but I get a dividend payout of 66 cents. Yes, that's small, but remember me talking about another stock I had purchased where I only got like 28 cents as the dividend payout, and I think that was yearly. And the 66 cents I think is a quarterly for the rate stock I have, and that was a pretty inexpensive rate for like $15. Some you can find cheaper and get just as good as a payout. Imagine compounding that over time. Now that 66 cents can turn to what? I guess what? $1.22, something like that. But just keep adding that up. Rates are very lucrative. You don't feel like dealing with property, management, tenants, you can go do rates. It's a very good way to generate passive income over time. And like I said, they generally outperform most stocks over time. They do a lot better than stocks in the long run in the future. So that's a very good avenue for a passive income. There's another thing. You can do something by purchasing bonds. What are bonds? Think of them as like an IOU from a debtor. So like the quick definition, kind of like exactly what a bond is. Like, and I mean the simple definition, it's just a loan from an investor, which is you, to a borrower. That borrower could be the government or a company or some type of operation. They need money for whatever the case may be. The government, maybe there's a war going, maybe there's a food shortage. They want to undertake some type of construction project. Well, they need a little bit of money, a little bit more money from that. And, don't forget, nation's kind of in a debt. They need some money to fund these projects. So what do? They give out bonds, which is basically an IOU. I will pay you later, and I'll pay you more than what you actually gave me. That's what a bond is. You might purchase one for $300 within a year once it matures, because they have a maturity rate. The thing about bonds is you can cash out the bond after holding a bond. You can cash out once you've held it for a year, or you can let it mature. I think it has a maturity time frame of 30 years, like the longest you can hold it. So it's either the two. You can either hold it for a whole year and sell it, or hold it for 30 years. So that 30-year time frame, that'll be great for a passive investment. Matures greatly. If you put in, like, say, $1,000 and matures over 30 years, it could be like $1,600. Sure, it doesn't seem much for you holding it for 30 years, but remember, you put that $1,000 in a long time ago. There's different interest rates for all of them. I don't have good memory when it comes to interest rate, how it is based on a yearly, day-to-day basis, all that. But rates are very good. Not rates, excuse me. Bonds are a very good way for passive income. So both rates and bonds are things I think you should be looking at if you want to generate passive income. And
Yeah.
no,
No, I was agreeing, but I'm a touch on that subject too. After you finish explaining it too.
No, I guess give some pros to, like, what are the I guess key takeaways. I guess for at least bonds, the prices are inversely correlated with interest. So rates go up, bond prices fall, vice versa. They have maturity dates. It's just all around a pretty good way. Oh, and how can I forget? It's a good way for I guess writing off taxes. Taxes are deferred, so it's a great way to write off some of your taxes. Bonds, they're a way to go. Same thing would be for rates when you get dividends. And necessarily, I don't think can be taxed, or it's just written off in taxes in a certain way. Some of the key, points of that rates, they generate a pretty good steady income, offer little startup money, easy to manage. It's easy to manage. You don't have to actually deal with a real estate property. You're just dealing with the company shares or rates that's publicly shared or publicly to be traded. And another thing, that rates act just like stocks. You can trade, buy, whatever you like to do. You can treat them just like stocks, except it's not an actual piece of real estate. And again, kind of trust rate. They invest in actual real estate properties like apartment buildings, cell towers, hotel, warehouse, any type of property you can think of. Rates has a hand in data centers, retail center, like anything. So they're very lucrative. I would highly recommend you. Like I said, you can do what you want with money. This is not financial advice.
Yeah, purposes only.
Exactly, entertainment purposes only. So I would highly recommend that you at least take a peek into like what are rates and what is a bond.
Oh yeah, and then I'm gonna touch up on the bond thing too, because now they're trying to make that real in crypto, because there's something that I read up on. I haven't invested in, so I probably would if I ain't had too much going on too. I ain't gonna go into details, but because I read up on it, it's called Treasury. I think it's called Treasury bonds. Yeah, yeah, on the XRPL. So it's called I think XRPL Treasury bonds or Treasury XRPL. But
they got their own Treasury bonds. I didn't know that.
Yeah, so because there's a lot of projects coming to the XRP ledger, and then there's actually these people call themselves the Treasury. So what Treasury XRPL or Treasury bonds, if I can't remember the name correctly, they make these bonds called NFT bonds, and then each of these bonds have a certain amount that says it's worth, but they have like different pictures. So you have this bond that has a coin on it. Then you have this bond that's a gold bar. That's probably the biggest bond. And then you have this bond with a plaque on it also. So like they have these three different types of bonds, like one bigger than the other. So that what they've been doing, they first came out when they first came out, they've been airdropping these NFTs to like the early investors in their tokens and their treasury coins. So and then it's exactly how you explain it. These NFT bonds mature and then they can sell it back, for like a bigger profit.
Oh, that's I definitely I know that. I'm gonna have to take a peek into that myself.
Yeah, man. Yeah, Treasury XRPL or Treasury bonds. Yeah, I was just typing Treasury XRPL to see if it'll pop up. Yeah, they're worth the read too. I read their chart and everything. They got more going on also because um so I probably be more descriptive with it too because they have their utility coin. That their purpose is to actually educate people like on crypto and then on this XRP blockchain, pay them for it, but also act as like a treasury where you can earn bonds off of also, like in the name. And then it'll be easier to onboard projects onto the XRP ledger, blockchain because they also give out funds too. But the people with these utility X coins, they have to vote for these list of projects to be onboarded. So if your project's good enough and then you get enough votes from the people who got these coins and use them as votes, then you can get funding from them to start your project. According to what I read. I mean, y'all can do your research, but according to what I read. So
Wait,
yeah,
so
so
they
yeah,
hold up real quick. If they fund your project, do you have to pay them?
see, you probably do have to pay them back because that's probably like a loan, but they fund your project in XRP, the actual coin. Now I don't know about paying them back, as far as I read, but at least at least you're onboarded and then you get the money from somewhere. You probably gonna have to pay that back.
Now, see, does that sound like a bond? It kind of works both ways. A bond is literally a loaner and a debtor. In the case Marcellus, I mean not Marcellus. Okay. Yeah, I
Gave
remember,
away my
man.
government.
Money. Can't speak about that government.
Yeah, speak about that government. Go ahead.
The case of money is like in the case you have to pay them back. In a sense, that would be a bond too, because you owe them. They have funded you. Can in the regular sense of a bond, a company can give out bonds as well, not only the government. They want a new project to be put out. They need to hire more people for their company. They want to make some new products or funding for a new department. They give out bonds, IOUs. That's literally a bond. All a bond is an IOU, except when they pay you back. Excuse me, they pay you back with interest. So, and
Yep.
this is another way you see how cryptos and stocks are almost interchangeable, like they're kind of coming together. Because now, because treasury and bonds was kind of like only a invest stock market. Now they're doing it with cryptos. They're interchangeable. Like it's almost like they're blending in together. You don't know the difference. Just one digital and one's a company's currency. Another, you're owning a piece of the company. It's not much difference. Both of them still have to do within the company, just different ways.
Definitely. Yeah, definitely different ways.
So that's what I'm saying. It's really interchangeable to a certain extent. You can hop in one market and hop in another. Don't think that these two don't have nothing in common or never will have anything in common in the future. Definitely will.
Yeah, they definitely will. Cause yeah, we're not gonna lie. They got their differences too, which we already went over in the early episodes, but at the same time, they're so similar. Very,
Exactly.
and then and then and especially with the rates thing too, like you can dive into real estate, indirectly with stocks, and you can do the same thing with cryptos too, which is called virtual real estate, which we're gonna go more in detail within the next episode.
But
Especially
yeah,
with the Ethereum Towers thing. Yeah, because now, now I found out you can stake off of the virtual property you own. Like your virtual property gonna be an NFT too.
all these teas and different I wouldn't say confusing. It's just like, what are y'all gonna do next?
Yeah, and then I knew there was a purpose, like a bigger purpose for NFTs. It's not just, pictures and videos and stuff like that. People artists just been selling, like 3D art and all these um NFT paintings that's been selling for over 500,000, or
Maybe I need
all these.
paint or something, make it as NFT.
Yeah, man, it's 500,000, 75,000. It ain't just in video games like that. They can be used, for a purpose. So we're slowly getting into that, into that NFT utility. So yeah, what people said right now is just a whole bunch of, paintings and, pictures and NFTs. They was like, well, okay, what can you do with it? Like seriously, what like what can you do with it? So yeah, we'll definitely touch on that topic, especially when we're talking about involving real estate within the next episode. But other than that, yeah, and then I'm gonna touch back on to like bonds too, because I mean I I did a bond too, you know. I like bonds, but I wasn't in there too long. And then I talked to somebody else about bonds too, like when I was doing stocks at the time. And then I was talking to somebody in the data hall too. And then they was like, yeah, and they love bonds. They was like, yeah, stocks is good, but you know what? Bonds is good too because you guarantee, your money back plus interest. But like you said, but that's over time though. It's not going to happen instantly like that. Because it's just like what we talked about in the last episode. You have to actually like put that money in and that time in too. You got to be consistent, and then you got to constantly, put money in, to make money.
That's true. But again, why they love bonds so much? Again, if I just spend $200, I'll slowly receive it back over time. So, like I said, it's guaranteed I'm getting that money back instead of say someone like me that does option plays. I could potentially very, very much just lose all that money. This is assured you're getting your money back plus interest. There is no ifs, ands, and buts about that.
Yep, guaranteed your money back plus interest. Don't gotta happen fast, but it still happens. Like I said, people at the end of the day, people gotta have some sort of patience.
They do, and that's why I said this is a great avenue for a passive investor, and so it's maybe as a dividend investor as well.
Yeah, I can see a dividend investor getting into this too.
So, like those are your paths, or like I said, you don't want to have too much maintenance to deal with as far as watching your investments and paying attention to your portfolio, this and that. You can do bonds, rates. They're great ways to pass invest. All we're trying to say is diversify yourself.
Yep, which leads us to the next topic too. Diversifying, whether in crypto and or stocks. Like truly diversifying. Like you don't really have to like invest in all these blue chip companies if you don't want to. This ain't financial advice, but there's other people making it off of different companies that's innovating. Don't didn't even have to be a blue chip company. They just made it within that category.
That
Like
too.
yeah. So like you don't have to put all your money into like Microsoft or Apple or Verizon or Google, to see money. Like you can like invest in something smaller, like video games, even though video games pretty big too. Or, or if you was investing in weed stocks and then, they went up, you make it off of there. Or something like you said, like coffee beans or something like that. It's like doesn't have to be it doesn't have to be blue chip or maybe a popcorn company.
Maybe I'll go to a little bit of detail. What he's basically saying is when you heard he was talking when Money was talking about Verizon, Apple, um, Facebook, what categories would you put those in? Those are considered like technologies, right? So that's a technology field. When we mean diversified, that too, you don't have to go for the blue chip company, but like the true meaning behind that is get something within another category. You can do like you have technologies, you have I wouldn't say the industrial field. You have construction companies. You can invest in some of them. The health the medical field. You got healthcare providers. You want to invest in certain healthcare providers or different types of like hospital organizations or the people that back them. Those be considered the medical field. You can invest in them. They're all different categories. Another one would be I wouldn't say fashion market, but maybe I forget what you call it. We'll say the fashion market or designer market, business market, like Target, Walmart,
Yeah,
um,
retail,
Wal-
like the retail markets. Yeah.
yeah, that's what it is. Retail markets, like things of those nature. Those have nothing to do with Facebook and Verizon. It's a different type of market. It's a different type of niche. They got their own dividend payouts and how much the stock worth, all that stuff. It depends on the company. But that's what we mean diversify. Don't strictly be within technologies, which Verizon, Apple, Microsoft. Um, what's that other one?
Yeah, yeah, you said Apple, Microsoft, Google.
Google. What's the other one? The old computers.
Are you talking about IBM?
Yeah, IBM. Yeah, them. Which I know plenty of y'all like IBM. Why y'all talking about that? We haven't heard IBM. IBM still in the making. Like they still make some moves in the background. You haven't heard from them, but they're still making money. Just know that.
Yeah, like a lot of the banks are still using that mainframe. So yeah, they still making that money regardless. And then if you go into like a Walmart, you know, because I went into Walmart one time and then I was buying something. They were still using the IBM machine there. So yeah, they still got all that customers,
Yeah,
especially crunching big numbers with all these transactions. So yeah, and then the crazy thing is, like a lot of the stuff going on, especially with like crypto and blockchain, that's right in their field. Like they can really take advantage of that. I mean, and then they're doing it now, partnering with Stellar, especially. And then they got their own. Then they got something called Hyperledger Fabric, within blockchain also, the computer language. So, like when you do your research on what IBM is doing now, then you'll see what I'm talking about. But that leads me into um, like you don't have to have your money in things like Ripple, the XRP or XLM or XDC, anything, or Algorand, anything involving like big banks and big institutions, what they can take advantage of. Like some people didn't invest in that at all, and then they just went straight into like the video game field, like Axie Infinity, which I talked about before, and then they earn that passive income by breeding their monsters or lending their monsters for other people to play. Then they um get paid a portion of their crypto coins, earn that passive income. And then, especially when they got in early and then they had all the monsters, like if they were to sell everything, they would have became millionaires because they got in early enough and then they participated, within the game that got popular over time, over the years, and it paid off. So even though XRP and then all these ISO 22 coins like IOTA, XRP, XDC, XLM, and other coins I just named, like even though those gonna be good coins for the future, you can still go into something in a completely different field and still make it.
Yep, that's like money with this thing. You're a game fanatic, you're trying to get into investing. Maybe you should invest in a gaming type of company within the technology. If you don't like technology, but you're a big fan of Walmart and retail stores like Kohl's and all the other places, invest in the retail market. You have the financial market, which would be the banks, things of that nature, mortgage company. Like there's so many categories you can invest in. You can invest in what you know, especially when we're talking about diversifying. Do the things you like and know, but just make sure you diversify your portfolio. Like again, you can do what you want to do, but it's helpful. Portfolios diversified. Like even some fields I don't know, I still diversify. Then like say you don't like we can hop back into like the dividend payout. What would I purchase? Well, what stock would I buy that someone needs? As far as like Apple, everybody has an iPhone. Like, everybody needs a phone carrier company. Facebook, everybody got Facebook. You can invest in the things and things people don't think about, and it'll still pay you very well. A great example would be what Money had said earlier: coffee beans to be exact. Everybody loves that coffee, right? You can't
Yep.
go a morning without that coffee. And I know plenty of people that cannot go without their coffee. Plenty.
Yep.
Me, I don't drink coffee myself like that.
I'm not a coffee person like that either.
I'll drink it, but I'm not like a hardcore. I need coffee. You can invest in coffee beans. Coffee is not going anywhere. If we didn't have any coffee, oh god, it'll be like destruction. No coffee. It was like a ban on coffee. Can you imagine that?
Oh man, yeah, everybody be cranky.
Exactly. It'd be a little bit more than cranking. That's an understatement. But that's what I mean. It doesn't have to be some big blue chip company or mogul company. I invested in coffee beans. Coffee beans ain't going nowhere. People need coffee. This is what I mean by things you don't think of. Like
Yeah, or
coffee.
even investing in gas at the right time.
Yeah, you can invest in gas at the right time. Or you can invest in some of the companies that manufacture the parts for these cars. Not necessarily like Ford and Chevrolet. You can invest in companies that back them or gives them some of the material for their product. There's different ways you can do it. There's different ways you can diversify. Just sometimes sit and think about it for a second. I said the greatest example would be coffee beans. Who would think to invest in coffee beans? And you think you wouldn't get much of a return from it? Actually, you can. Well, stop. There's an avenue everywhere, and they're hidden. They're hidden just as good as well. One of those. Sometimes you got to search. You got to search under your bed and the closet. You got to go around the house looking for them, but they're there. That's
And then that's what I learned, from like studying Jason Studman too, in Angel Pub. That and then like after I learned it, like I started realizing like what some people was looking for. Like, for example, like iPhones are popular. Like you don't have to invest in Apple if you don't want to, but you can still take advantage of the popularity of the iPhone because you can invest in the company that makes the chips. And people was looking for like this company that makes the chips too. I don't know if they found them, but they was looking for that company.
it's a
And
good
then they,
example because
yeah,
I don't have to necessarily go for Apple. Apple needs that chip from that particular type of company. I'm pretty sure if they switch to another company, it'll probably function. It'll still function well, but you'll notice some differences. So they probably wouldn't switch up anytime soon because people are satisfied with current status quo.
Yep. And then like another example too is like people want to take advantage of autonomous vehicles because we know they're going to happen. They're going to be in the future. Self-driving cars. So like people, and then people been asking me this before, like how you invest in these type of cars. You know, so I don't know like a company that's going to, you know, make that. You don't have to invest in the company that's going to put it out, but you can invest in a company that makes these sensor cameras, you know, because that's what they're going to be using. So that's something to think about there. And then when the autonomous vehicles get popular, and then one of them's using their cameras, their stock is going to go up.
That's
So
true.
that's an example right there. And then same thing with cryptos for real too. Like I'm gonna use IOTA as an example because they're aiming to have aiming to do machine to machine payments. So they already talked about banning some of these, self electric cars or autonomous vehicles too. And then they're going to start paying for themselves. So they're going to have like the IOTA wallet, and then they're going to start paying for like their own gas and then these IOTA coins for example.
Hmm.
So yeah, you can invest in IOTA and take advantage of some of these autonomous vehicles or electric cars when they get popular. But that's not financial advice. That's just one example.
Yeah, these are all just examples. I'm not telling you go out, get coffee beans, get Verizon, get these Apple, not Apple company, but the company makes Apple chips. They're just recommendations. It's like jumpstart an idea, a guide for you to look.
Yes, definitely a guide for you to look. We're always going to encourage you to do your own research, but this is definitely a guide. What all that we're putting out.
Yeah, that's true. Just giving that. That's the whole point. Is trying to open the door for you to this new type of, well, not new type of deal, but it's kind of new for you. We just want to open the door to you. Now, where you go is
Yeah,
dependent upon yourself. I'm just opening the door for you.
yeah. You either take the blue pill or the red pill on this one.
Exactly. Don't hit them with the Matrix reference.
Yeah, because that was a perfect time too. It was like he either gonna like realize what's in front of you, or you're just gonna ignore it and then miss out. You know, because a lot of people, a lot more people miss out than actually realize what they got in front of them and take advantage.
And sometimes they realize a little too late. You can kind of start at any age, but the best time to do is when you're young, because you can generate more profit and more wealth when you start early. And that's with anything.
Yeah, that's true too. So regardless how old I was, when I realized this stuff, I'm just glad I was still young when I was doing it. Because I started, you know, like at 24, going on 25, and I still some days I wish I could have realized this earlier, like we all do. But at the same time, I was still young, and then I still got a life ahead of me to you know build up and see this all appreciate, and then learn new things too. Like, and I'm learning every day, especially within this crypto space. There's always something. And then that's something you're gonna realize when y'all do y'all research. Like, oh man, there's always something.
It's always something. Like I said, same here. I'm still learning. I wish, like, if I knew even half the stuff that I know now, if I knew that back then when I was like literally when I turned 18 or 19, boy, I don't even think we would be doing this podcast. Like,
Oh, yeah. And then if we were to do it, we had some better equipment. We had
yeah,
some more money.
a lot better equipment.
Oh man, yeah. Look at these technical difficulties. So yeah, man. Yeah, we starting off from the bottom. Starting off from the
Exactly. Y'all
bottom.
don't realize how many times we got to cut. to stop because something that went wrong.
Something that went wrong that we had to say technical difficulties and cut some stuff out.
It's gonna be
Man.
hassle when we go live.
Man. So hopefully we're gonna be now. We like to go live. We gonna get that better equipment, but yeah. So we're just working our way up, and then that's the thing too. You got to work your way up with everything. Same thing with cryptos. I started from the bottom with cryptos. Like I started off getting Litecoin. I ain't gonna say all my shit, but I started off getting Litecoin. And even though Litecoin that went up, that's like looking back on it, that's not something that I would get. But that I just started off and getting it because it was just well known. Like I started off getting stuff that everybody knew about instead of things that like everybody is not saying that's more value. And I'm gonna just put it like that.
Same here. Like when I remember. I think here's the thing when this goes back to stock exchanges or brokers for a platform. Like when you first download Robinhood, I think they give you one free stock or at least like a spin the wheel type of thing. And I remember I got plugged. I was like so excited. I finally got my one and it was free. Man, I used to watch that stock all the time. I said, well, is it gonna rise in price? Is it gonna drop? What's it gonna do? All I got is one little share. I'm sitting here, all my expectations are on it.
Oh man, yeah, I remember getting pennies off my dividends. I was like, yeah, I got some dividends now.
I got some dividends. I'm with the big boys now.
Talk about passive income. Yeah, man. And then our mindsets changed too because yeah, I remember I did the same thing. I kept looking at the stocks, when I was investing in stocks. And and getting the popular stocks at that too. Like I was just going crazy looking at it, saying if the price will rise, not realizing if I could like get something that'll pay me back. I will have even when it goes down, I will still get paid. So I'll still be happy with that and I'll be ready when it goes up. Because when it goes up, I have more money.
Yeah. I remember I was looking up. One of the first ones I bought was like McDonald's. I'm like, oh yeah, McDonald's stock, because everybody goes to McDonald's.
Everybody go to McDonald's. Yeah, everybody want them a chicken sandwich, a large, bro.
McDoubles, man. I'm like, yeah, that's a good investment, right?
A large sweet tea.
For real, but that's how it was starting off. Like, I didn't know what I was doing.
I didn't know what I was doing either.
We just buy random stuff.
Yeah, man, I thought it was a good idea to buy weed stocks too. I mean, I ain't gonna knock them because I do believe they'll shoot up one day. But right now, I was like, yeah, I'm gonna buy every weed stock in the market.
Exactly. I know one of them will go up.
They kept going down.
Exactly. That's another thing too. First start off, I'm not realizing. Well, this is something you gotta realize. If on the chart we open these apps or whatever, and you see that it's green, you're like, oh, I'm gonna buy it, and then it turns red. It's time to sell it. I'm not making no money off. Bro, that's like the biggest mistake. I guess it's a common mistake because I did the same thing. I'm thinking if it's green and high up, it's perfect to buy. That means it's worth something. But if I see it's red, I'm not buying it. And they ain't making no money. And it seems like they ain't doing too good.
Yeah, we literally did what everybody else do. Like you're supposed to do the opposite. I did the same thing too. I was like, oh, it's in green. Oh, it's going up. Yeah, let me go ahead and hurry up and FOMO. Nah.
No, me, I was literally, I see it's green. Oh, that means it's doing good. I'm gonna buy it. And it'll be another stock. It's in the red. Oh, I ain't buying that one. It's down in price today. My stupid tail not realizing that this is a sale going on. Look, for y'all new to investing, when we say this, when we see a price drop in any stock, different circumstances could be surrounded. But say nothing's wrong with the company. It's just for the day the price is down. They're just doing price down for this next few weeks. Say it dropped like $20, $30, or even a massive drop like $100. Sales worth like $400 and dropped to $300. We don't see that as doing bad. As investors and traders, we see that, oh, we got a sale going on, like, a half off. That's how we see it. It's a sale going on for us. It's time to buy
up. Yeah.
up.
We definitely we love a bear market, man. We love a bull
Exactly.
market too, but we love a bear
Like,
market.
exactly. We love a bull market. Don't get us wrong. It's not that bears against, to a certain extent it is, but we play both fields because we're all in it together making money and winning trades or investing for the long run. If I see a sale going on at the original price of 400 and now it's like 200, I'm gonna buy it. This is like walking in the store and seeing like a pack of meat that was usually like $10, but now it's on sale for $6 because of a special event going on. I'm not gonna go in there. Oh, it's $6. They're not doing too good. That means bad meat. No, it's just a nice, good sale going on. Buy it. It's the same concept for stocks. Crypto's at that too. If the price drops, again, there could be different circumstances surrounding it. But say nothing's wrong with them, they're just down in price today. That's a sale going on. Buy it, scoop it up.
Hey, oh yeah, man. So market crash equals Black Friday. That's what it is.
Exactly. I look at it as a Black Friday. Yeah, it sucks, but hey, everything's El Cheapo right now.
Yeah, it sucks for everybody that didn't get out that money out in time. They can buy more, and then the market go back up.
Yep.
And,
And speaking of the market's going down, that goes to certain trading strategies too. To basically risk against your loss. I can dive into that a little bit further. It came to my mind again. It's just like if you bought a stock that says $400, but say we're in a bear market all of a sudden and it slowly starts going down. Another way to risk against it or to save some of your funds. So when you look at your portfolio, it'll show a graph how everything's doing. And you'll have something called a green day or a red day. If all the prices are going down, of the stocks, it'll usually in your graph it'll show red, and you have a red day. That means I'm not necessarily not making much money. It's just the worth of the shares of stocks that you bought are down. That's all it means. Just the worth of it is lower than what you originally bought it for. A green day, the worth of the share is higher than what you originally bought it for. So anyway, if say it's a bear market and the prices are going down, and you'll see it in your portfolio that it's a line literally going down, like it's like tumbling down. A good way to risk against that is to, I won't say scalp trade, but by using a scalp system. If it started off at 400, those original prices, say it dropped down to 360. To risk against it, if you're trading like an active investor, you can buy at 360, and then if it drops, say, to 354, you'll buy again. And then say it drops to like 352, you'll buy again. And then say it drops to 348, you'll buy again. Eventually, by you doing that, it'll even out your portfolio, and you're risking against like kind of how much you lost. Because technically, you're still getting I wouldn't say a profit, but you're getting a bargain because originally it was $400. As it's steadily going in price, you're kind of doing like a stair step. You buy it each time it falls on a step. So that'll be a good way to risk against a market crash. Well, not market crash, but just to risk against your funds.
and then that's part of what I've been doing too. Like I recognize an all-time high, within this crypto, and then like it slowly goes down, and I wait till gets to a certain point. Like if it's close enough to where I think it's gonna drop the lowest, I'll just buy it, even if it's like this is real cheap, but even if it's like 1 or 2 cent away from it, it's still away from the all-time high. I just keep on buying every time it drops down every week, and then it goes straight back up to the all-time high.
That's a strategy. And that reminds me again of back then when I used to buy at the all-time high. This goes back to seeing it was green, it was up. Oh, it's time to buy it.
Every time it goes green.
I wish I could go back in time and just slap myself.
Oh man, yeah, me too, man. I need to go back in time and slap myself.
Like, you just grab them up and shake them. Like, what are you thinking?
What are you thinking? Hey, you need to do the opposite of what you're doing. Trust me, it works. It works. No question. Hop back in the portal.
Exactly. I wish I could do that. But that's
I
the
mean,
beauty of life. You live and you learn.
yeah, you live and you learn, and your mistakes and your losses just make you stronger. Like we talked about our losses and our mistakes, in these horror stories in episode 3. So, yeah. So if you've seen that episode, like you definitely know what went on and how we actually rebuilt from that after losing so much and almost losing a lot.
Yeah, I definitely almost lost everything, but that was the learning curve for me. And I think for a lot of people, sometimes you have to lose a little, sometimes lose a lot to get the point. Because, like I said, I can tell you all these warning signs, but sometimes some people still cross that shaky bridge and fall.
Yeah,
And that
man.
would be the lesson.
And then, yeah, because remember, at the end of the day, it is a mental game.
Yeah. And like I said, it's life. We're going to make mistakes. Even if I tell you, you can like be careful and watch out for it and still fall for it, or just get caught up in it. Everybody makes mistakes. It's just you live and you learn.
Yeah, definitely. And then this is not financial advice. This is for entertainment purposes only. And don't. And then we're not saying we're rich, and don't even say we're rich either. Don't go think we're rich. We just talk about money.
And we just like talking about money. It's just for entertainment, man. That's all we talk about. Even though we talk about money, we're still trying to make it.
Yeah, still trying to make it. We're an example of that. We just like y'all, but we actually seek the knowledge and then applying it, which everybody should be doing. Seeking it and applying it and being consistent. Yeah, like we're definitely consistent with this. We're making content out of this, so that tells you that much there.
Exactly. It's just it's just kind of hard finding time. Got to squeeze it in because again, we still got to live our lives. Still got goals we want to hit. Like an end goal for me, it would be one of the biggest. I have further goals than that. For example, I'm trying to retire by 30. I know that sounds crazy, but I'm gonna tell you first, I'm not working until I'm like 65, then I can retire. I'm sorry, I'm not doing that. I don't see myself working even like around 50. I don't see myself doing that. I'm retiring at least by 30. No later than like 33. If I have to give myself some room to move, but I don't want to do that. That's my goal. Retire by 30.
I mean, that's my goal too. Either retire in my early 30s or be well off, like, way more comfortable than I am now, where I don't have to worry about money as much, but I'm still, trying to get to that point where I can completely retire.
Oh, I'm trying to do it where I just literally don't have to work a 9 to 5 no more. That's me. By 30, I'm not working a 9 to 5. That's my goal.
Oh yeah, I'm not trying to work a 9 to 5 no more either. Still make your realistic goals, but at the same time make that goal. But yeah, I'm trying to retire. At 32, my early 30s, and passive income is the way to go. Where whatever you do to get it, whether it's stocks, cryptos, earning, being an entrepreneur. But yeah, that's pretty much it. And we're gonna see y'all in the next episode.
Yeah, see y'all next time. But we got Money got a lot of stuff to talk about. Mike gonna be on him for most of it. I'm gonna tell y'all now.
Oh yeah, it's exactly what people been waiting for too. Yeah, they got a lot of questions for this one.
Sure they, man. But like I said, it's not financial advice. It's just entertainment. We just like to talk about money.
Yep, we ain't rich either. We just like to talk about money. To put that out there.
You always make sure to prove to push that point out.
Got to. But all right, till next time.
Till next time, y'all. Peace.
Peace.